All right. So markets have been a bit, well, I got to say this. We saw more volatility in the last week than we've seen at least anywhere on this chart. So we've not had the kind of volatility like we had just in this area right here that you see on the screen. Haven't seen anything like this, at least for this year. This has been the most volatility we've seen year to date. When we were looking at the VIX, I was looking at the VIX middle of last week, and it was as high as it had been since COVID. So that's the kind of moves we had, where 2 days we went from 550 on the S&P, count them 1, 2, and we were already down to 510. Really 555 to 510. That was almost a 10% drop in 2 days. That's going to make volatility kick up quite a bit. But over the last week, we had recovered somewhat. So we are sitting right now, and this is the S&P daily chart. What I want to do with you is I want to draw comparisons from the short-term charts to the long-term charts. Now, this is as short-term as I'm going to get. I'm not a day trader. I don't go into looking at 1-minute bars or 5-minute bars because that's not the sandbox that I play in as a trader. I look at the dailies. The dailies are my short term. And so you look at the short term on the daily, you can see that we've climbed back up to about the middle of that area where we started seeing that huge drop. This is a good resistance line right here around this 535 to 540 area is the first area of resistance where we gap through just about 2 weeks ago, the lows that happened in July. The next area of resistance is going to be up here around 550. That's a round number resistance. If we get above that, and then we may see this target get eclipsed, and we might make another run for the 580 area that we were looking at. 550 to 580 was our original target. We hit the 550. We actually blew through it to about 565, had that pullback. We'll see if that happens. The odds are that it's not going to happen, at least in the time frame we have between now and sometime mid-October. But I want to show you what the weekly chart looks like. The weekly chart suggests that we do continue the pullback, and we get that pullback down toward the end of the year. And then we start to look for a longer target, which is a couple of years out, to take us all the way out to, check this out, 700 on SPY. And that's, again, based on this long-term move up that we're still potentially in the 3. So we haven't really we don't know whether this pullback is going to occur or whether this high is going to continue. We would need to see lower lows here that happen off of the lows that occurred late last week or late 2 weeks ago before we'd see this pullback come into place. But what this is telling me is that we do see the longer term for some quite a bit substantial higher highs going into 2026, actually. TLT is showing a daily chart where we flipped. Remember, last time I talked about this, we flipped from bearish to bullish, and now we're seeing the bearish area down here around 87.50. We had a big run up as the market came down. We've had a pullback as the market's going up. Is this pullback going to continue? And more importantly, you got to go out and look at what the Fed wants to do. And now all eyes are on the Fed, possibly making maybe even more cuts now, because they do see that, when you increase rates, what was it, 8-fold from 2021 through 2023, then that's going to put a damper on the economy. And now they're realizing that maybe they need to get these cuts going. And any new reports that come out might signal a rate cut that could happen before September. But we'll see. Anyway, if the rate cuts come in as they expect, that's going to drive bond prices higher. It's going to drive interest rates lower, and that's congruent with what's going on in the stock market. The weekly chart looks like this. You go all the way back into 2023, and you'll see that big move up from 2023 forward. Here's 2024, and here's the bounce that we just saw. We're seeing a little bit of a pullback. You've got a long-term support line that's rising. You've got a longer-term resistance line that's slowly dropping. If interest rates do drop, I expect us to get above that resistance line and trade up around that 105 area, maybe even a little bit higher, depending on when that breakout may occur. Moving on to USO, nothing new here. We've been in this choppy range, and this is the choppy range that goes back to February when we started the February seasonal bull. We came out of that in July to the seasonal bear. We did see that kind of come down. Now, what's making this move higher right now? I believe it's all the tensions that are going on in the Middle East. Is a lot of this driving these charts higher. But going to run into some resistance here at 82.5, and more importantly, maybe even closer to 82 as we're seeing that resistance start to fall a bit. Longer term, however, USO and oil as a whole seem to be putting in bullish pennants, which could propel us back up above $100 a barrel. What makes sense there? Yeah, if interest rates drop, the dollar's going to drop. That's going to push. On bullishness in stocks, in bullishness in bonds, and bullishness in commodities. And oil is one of the commodities that is affected most by what our U.S. dollar is doing. Another one that's being affected, and not only by what the U.S. dollar is doing, but the uncertainty, is gold. GLD is back up, and it's now hitting. It's getting close again to the all-time highs that you see here. When I snapped this, we were above 227 earlier this morning. You've got all-time highs sitting up there around 230. That's off the daily chart you can see here, and then again just a little bit, maybe a week or so ago. This looks like it's going to be taken out, and our old target of 250 looks like it might stand. Remember, we were worried that if gold dropped below our trend lines and got down here below this 216 area, that we were done with the uptrend and we were going to see possibly lower highs and lower lows. That doesn't seem to be happening. Looks like we're right back into the mix for GLD to go higher. Check out the weekly chart. Weekly chart is incredible, as we've gone from not even a year ago, GLD at 150, and now we're up there close to the 230 all-time highs. Gold continues to be the outperformer when you look at a mix of commodities. Short-term target 250, long-term target, who knows what the long-term target can be? Again, we're looking at lower interest rates, which could put upward pressure on this commodity as well. So takeaways for the stock market look like this. Long and short-term comparisons, we did that on SPY, we did it on TLT, we did that on USO, we did that on GLD. Stocks, bonds, and gold, SPY, TLT, GLD. The daily and weekly comparisons agree with each other. Oil's the only one that doesn't agree because, again, it could be because we have this seasonal bearish pattern that's going on with oil, but as the short-term pattern is sideways, the long-term pattern is up. And that's the market takeaways when we look at the overall 30,000 foot view for the stock market.